Hey there, it is Corey from Verse. I hope that you and your families are all going well. We are back again for another market and economic update, and I am once again joined by my partner in crime and one of the financial advisors here at Verse Wealth, Ashley Bishop. Ash, thanks for joining us. How are you going?
Yeah, thank you again, Corey. Doing well, thank you. It's a wet day outside, so I'm keeping warm. But no, it's been a good couple of weeks since we last spoke, and I'm happy to be here and keeping well.
Great. Yeah, I know that you're enjoying working remotely, as am I, and it seems to be working pretty well so far. So we won't be in the office anytime soon, but when we are heading back, we'll all let you know. In terms of the update this week, a few things have happened in the past fortnight since we last got an update out to you. In particular, we have seen markets continue to kind of grind their way higher. The Aussie market's now up 23% from where it was from those lows on March 23. The US market is up 33% from where it was in March 23, which again is pretty surprising given the economic conditions that they're under at this point in time. Last week, we saw some positive developments around a small vaccine trial, which did see the markets bounce a little bit. This week, we have seen quite a bit of news around an escalating tension between Australia and China with some trade and economic implications that Ash will just spend a couple of minutes getting us up to speed on. And the big news overnight was that the federal government came forward and let us know that they have overestimated the JobKeeper cost by about $60 billion. So initially estimating the scheme would cost about $130 billion to the budget, covering 6 million people. That's now been revised back to a cost of $70 billion for 3.5 million Australians, which really is a good thing. It means we're doing much better than anticipated, but it will have some implications, which are generally positive, which Ash is going to share with us. So a couple of questions we've got for you, Ash, but the first one being around the JobKeeper scheme. Tell us a bit about what's happening there and the implications.
Yeah, look, I mean, this is the developing story, so I'm sure more will come out over the next few days. But effectively, what has happened is that, as you noted, Corey, the government's made a fairly sizable error in its estimations, which means that instead of this costing 130 billion, the scheme, which effectively attaches employees to the employer and in some ways pays them $1,500 a fortnight or that amount to be with the employer. It just means that that scheme is going to cost, as you noted, $60 billion less. Now, the implications of that we'll learn more and more over the coming weeks. But what it does mean is the government has a lot more flexibility with what it does with the scheme, simply because it has effectively $60 billion in spare change in some ways, as it's been referred to. It's been referred to the best way to find money in your back pocket in sort of government history, which is quite a funny way of looking at it. But effectively, if you look at the decisions that go forward, so when the scheme is supposed to finish, does it mean that instead of falling off a cliff, as it's been described, the government can taper that expenditure and allow businesses to slowly but surely recover instead of having to make big decisions about their employees at the end of the scheme? Because that was the big concern. How much does this cost blowout mean? What can they do with the scheme? Because the assumption is the economy is not going to be fully recovered by the end of September into October when the scheme was supposed to finish. So it gives the government a lot more options on what it does at that time, but also potentially allows the scheme to be expanded to sort of more casual employees, temporary residents as well, which is what the Labor Party wants. So we'll see what they do, but at the end of the day, it's good news, embarrassing news, but good news nonetheless.
Well said. Yeah, hopefully they do expand that to casual employees. I know there's probably a few of our clients watching this now that have slipped through the cracks in terms of JobKeeper. To see them included would absolutely be a good thing. We saw last week the US market bounce almost 5% overnight on the back of that small vaccine trial news we saw. And our market had a little rally on the back of that as well. We have said that the vaccine and the progression around getting a vaccine out there will have a clear link on investment markets in the next 12, 18 months. So just tell us a bit about what happened there, Ash, and just set some expectations around what we can expect moving forward.
Yeah, so in terms of the science, I'll admit I'm not a scientist, but what really happened was the early stages of a vaccine trial went well. And the market, as we talked about previously, when there's positive news, in particular around the vaccine for sort of ending the pandemic that we find ourselves in, reacted really strongly to that, as you can imagine. But the next day, what happened was there were some questions around the validity of the results, not so much in the actual results themselves, but just the scale and how much we can take away from it. So what the vaccine was looking at was sort of working towards building up antibodies to fight the virus. But then it turns out that only 8 examples were actually recorded. So if you think of a global pandemic and 8 sort of initial positive tests for building this vaccine, there's a bit of a discrepancy there. So it's important to realize and remember that the initial estimates were 12 to 18 months for a vaccine. So potentially, like, the good news there would be a March vaccine, and then you have to build up enough capacity to provide vaccines to the general or global population. Like, all this is going to take time. So as we talked about, good news, the market is going to react well to that, but we do need to temper expectations about how that's going to look. And we're going to see that when the initial sort of good feeling goes away, and then people sort of look at it in a bit more sort of cold light of day, and the market responded by pulling back a little bit the day after during the week.
That's some good perspective. Thank you, Ash. It does seem that in the interim that the US president, DJ Trump, has found an interim treatment. Is that something that you'd advocate?
Look, I mentioned before, I'm not a scientist, nor am I a healthcare professional. But traditionally, I don't take drugs that have not been proven to work. But that's just me.
Sure. Yeah. Probably not setting the best example, but we'll move on. Finally, just in terms of the news we've seen this week around the trade tensions between Australia and China, which really have stemmed on the back of the Chinese handling of COVID-19. Just tell us a bit about what has happened there. And what the implications for our economy that's trying to get its wheels moving again may actually be.
Yeah, well, we have seen a few different responses from the Chinese government. Now, depending on who you listen to, these responses are in, response to Australia's call for an independent inquiry into the origins of COVID-19. Now, that sounds like a very sensible thing to understand where this global pandemic came from, but we've talked about before, the Chinese government, they do sort of control their own messaging. It's clearly something that they don't want at this stage, though they have sort of compromised a little bit during the week with the World Health Organization. But what it means is that the Chinese government has effectively placed significant tariffs on barley exports from Australia, which was sort of 80-90%, which will effectively end barley trade to China from Australia. They have removed licenses or import licenses from some beef abattoirs here in Australia, meaning that those abattoirs are no longer able to export to China. And there is talk of restrictions in iron ore imports as well, or tidying up the process there from a Chinese perspective, which is going to have an impact in some ways on the Australian iron ore exports, which are our biggest export to China. I mean, those things, in theory, based on what the Chinese are saying, have been coming down the pipeline for a while. So it may be just that we just need to tidy up some paperwork and that trade will come back. But the general feeling is that the Chinese are using trade as a means of punishing Australia for its calls for an independent inquiry. What happens next, we don't know. But certainly in terms of China being our largest trading partner, it's going to be very difficult to maintain a really strong recovery if we're not able to trade with China as we were previous to the pandemic. And so that's going to create headwinds. It's going to remove investment from firms and potentially impact jobs in Australia as well. So bad timing, but potentially opportune timing if you're a Chinese government skeptic. But we'll only have to wait and see what happens there. But certainly, trade tensions with our biggest trading partner certainly won't help the recovery.
Sure. Well, Ash, again, thank you for the rundown. As usual, it has been insightful, and you are keeping us all very well informed. So thank you to everyone. Thanks for tuning in again. We hope that you are well. I'm sure we have spoken with you all in recent times. If you need to reach out to us for any reason, any questions, you need to review things that you're doing in your financial life, let us know. Many of you are making super contributions this time of the year, so getting emails and instructions from us around getting that done pre-30 June is a priority. But as always, we are here when you need us, and we look forward to seeing you soon. Enjoy the weekend. Bye.